Welcome to the Live Wealthy podcast with Dawn, where we are growing our wealth and our worth at the same time. You ready? Let's go. Well, welcome back to the Live Wealthy podcast with Dawn. And on this podcast, regularly, I teach people how to live wealthy. That's WELLTHY. In order for you to live wealthy, which is building your internal wealth and your external financial wealth at the same time. It's about building your worth and your wealth to arrive at this place of fulfillment and happiness that we all want to have in our life. That is what living wealthy is. Yes, you need the money to support yourself to live wealthy. You need that technical advice, that financial planning advice, but you also need to understand the psychology, the behavior around money, and so you can build that internal security and the financial security at the same time. And in order to live wealthy, there is a system. It's a process where we own it, earn it, and grow it, where we're owning our worth, earning our wealth to grow our life. And I'm here to ensure you that when you go through this process and this system of own it, earn it, and grow it, you will be able to arrive at this place of living wealthy. Now, on today's episode, this is the final episode of a 3-part series where I am teaching the 3 biggest tax and financial mistakes that I see small business owners making, entrepreneurs, network marketers, anyone that owns a business that has that 1099 income, the 3 biggest mistakes that I find them doing with their money that's costing them thousands of dollars that they are just throwing away and not being able to ensure that that money's available to them to work for them in their life. So why do we talk about the 3 biggest mistakes? Well, of course, I've never met another human being on this planet that didn't want more income in their life. And in order to get more income, we need to either grow our top line revenue and having more revenue come in, or we need to maximize our existing income that we have. And the way to do that is through minimizing our taxes. And we really want both of those things to happen. We want to maximize our income by growth and more profits and revenue, but we also want to be really smart from the other side of the equation, which is how do we take the existing income we have and how do we maximize that as well? Because when you do both, you're going to able to live wealthy. So the whole point of minimizing our taxes and these mistakes that I find with so many people making in their financial plan, which comes down to really the tax plan inside of the financial plan and the tax mistakes people make, is because they're not aware of the opportunities that are available to them. And I'm here to share those, get really technical with you on those. And that's why we're talking about growing it today, because we're going to grow our money. And it's really about the whole reason why I want you to reduce your taxes legally, of course, and following the tax code and understanding the tax code. But the whole point of minimizing your taxes is so you can invest more money. We want to invest more money. I want you to invest your money in 3 different areas. I want you to invest your money in yourself. You are the income machine to your life. And if you want more income, you need to invest in yourself, in that internal wealth, right? What I call worth. You need to invest in that internal wealth first, because that's what's going to move the needle the most in building your external income or that external wealth. So I want you to invest in yourself. I also want you to invest in your business. A lot of you are small business owners, right? Entrepreneurs, network marketers. What are you doing to invest back into your business so you can grow that business? And then finally, are you investing in your future? When you minimize your tax bill, you're going to take that additional revenue and also invest that in your future. So when we minimize our taxes to get more out of our income, we're going to invest. We're going to invest in ourself, our business, and our future. Now, remember I said this is a 3 episode. It's a series of 3 biggest mistakes. The first episode was about protecting your business asset through setting up the proper entity, like an LLC, or how do you file your taxes, all that stuff. That was about business setup. The second episode in this series was really all about minimizing your taxes through all of the write-offs that are available to you. One of the biggest write-off is like writing off your professional services. Like, how many of you actually have a wealth advisor, a trusted fiduciary wealth advisor, where you're paying them a fee? Are you writing that off, right? People forget to write off me, like me as a professional, right? Or your CPA services. And there's so many missed opportunities, writing off your house, your car, etc. There's so many. So we talked about that in the second series of this 3 episode series. And then finally today, we are going to talk about that third investment, which is investing in your future. And so many times I find people don't fully invest in their future because they think they can't afford to do that. So the first rule of thumb is when you're saving your tax dollars and you're investing in your future is minimally, I want you to commit 10% to your future. So you're going to save and invest 10% of your gross income and put that away in some qualified plans that are going to help you reduce your tax burden today. So for example, most of us, if you look at your federal tax bracket and your state tax bracket, most of us are in, on average, a 30% tax bracket. Some of us are higher, some of us are lower, but if you take federal and state income tax, 30% is an average number to take. So what I'm saying is that every $100 you put away into your retirement plan or a qualified retirement plan, you're going to save $30 in taxes, which is 30%. So when I say save 10% of your gross income, really you're only saving about 7%. And you can't afford not to save money into your retirement plans through your employer or through yourself. And we're going to review those retirement plans today. But let's just take an example. Let's say that you make $100,000 a year, and I'm telling you to put 10% away. That's $10,000 a year. And if you divide that out per month, it's $833 a month for you to put away. But that's before the tax savings that you get. So after that tax break, instead of really saving the $833 a month, it's really only costing you about $583 a month to save. And so many times people are like, I can't afford to save for my retirement, or I have all my money in real estate, or I have all my money, invested in my business. That's not liquid, and that will screw you up in the future. You need liquidity. You need opportunities to save in different accounts. But let me challenge you and say, you really can't afford to not save $583 a month. If you looked at your spending plan, I'm telling you, you could find so much money, more than $583 a month. You could find more than $500 a month, $600 a month, $700 a month that you're wasting your money on. Whether it's paying additional taxes, you're wasting your money on overpaying your life insurance, disability, long-term care, home and auto insurance, like all of the things, right? All the insurances. We waste so much money. We waste money on food. We waste money on those, going to get our beverages. Even the beverages at the grocery store are expensive. Like I'm not telling you not to have that, because I am the last person to tell you to not go have fun and enjoy the beverage and enjoy going out to dinner and all that kind of stuff. But if you really start to look at all of the waste that you have in your spending plan, I'm telling you, coming up with $500-$600 a month is going to be super, super easy. So the moral of the story is save no less than 10% of your gross income. So as small business owners, where can this money go? Like, what am I talking about, right? So there's so many different accounts you can put your money into. So the first one, if you are a solo entrepreneur, it is just you and you are doing everything in that business and you don't have any employees. One opportunity for you to invest in your future and save tax dollars is for you to consider investing in what's called an I-401k. Or another word, single 401k. Just think about me, right? So it's an I-401k. And inside of this I-401k, there's an employer contribution and there's an employee contribution. And if you are on your own and you have your own business without any employees, guess what? You are actually the employer and the employee. So you can put as an employer and an employee up to $66,000 into that I-401k every single year. Okay. And if you're over 50, like maybe me, there is something called a catch-up contribution of $7,500. So I'm grabbing my calculator here. So, that's like over $70,000 that you can put into that plan every single year. And remember, for every dollar you put in there, you're going to save about 30%. So if you really put $66,000 in there, because if you're under 50, unlike me, you're going to probably save approximately $20,000 in taxes. Like, that's crazy, right? So pay yourself first, put money into an employer plan. So that is if you are a solopreneur on your own. Now, let's say you have employees. You have maybe your kid working for you, or you have some employees. Well, there's some other plans you can consider. The next one I want to talk about is a simple IRA. And it's called simple because it's way simpler to set up than a 401k. With 401ks, there's a lot of paperwork, but sometimes the paperwork makes sense to do if you really have that extra cash to put away into your retirement plan. But a simple IRA is one where you can put up to $15,500 this year in year 2023. And if you are over 50 years old, you can put up to $19,000. Now, the stickler with the simple is that the employer, you are the employer. So if you have a simple IRA, and by the way, this is what I have in my business. I have 12 full-time employees in my business, and I set up a simple for myself and for all my employees. But I am required as the business owner, the employer, to match whatever my employees are putting in their simple IRAs, because we can have the employees have it just like the owners, but I'm required to match 3% of whatever they're putting into the plan, right? And the maximum, remember, that they can put in the plan is $15,500, or if they're over 50, they can put in $19,000. But I'm required as the employer to match up to 3% up to their salary of $330,000. Okay. So if you have employees and you have a simple plan, what you do for you got to do for all, and you're required to match a percentage of what your employees put in that plan. Okay. Another opportunity would be a SEP, S-E-P. IRA, a SEP IRA. Now, this is a plan that the contributions going in are just the employer contributions, okay? There's no employee contributions. So there's no catch-up provision. You can't put more in if you're over 50 because it's just the employer putting the money in. And in this plan, you can put in the less of up to 25% of your earnings, or a maximum of $66,000. So which is ever less. So if you make $66,000 a year, if that's the income, you can't put in $66,000, right? You can't put in your full income into the SEP IRA under this plan, but you could put in $66,000 or 25% of $66,000. Okay. Now, if you make $400,000 and you take 25% of $400,000, that's $100,000. You can't put $100,000 into that plan, but you can put $66,000. The max is $66,000, or the less of $66,000, or 25% of your earnings. Now, here's the thing. Here's the thing. I'm trying not to say here's the thing, but I still say here's the thing. And by the way, we all say here's the thing. But with the SEP IRA, you must do the same contribution for you as your employees. So if you happen to be able to put 66,000 in, you got to do the same for your employees. Or 25% of their income, whatever's less, of course, but what you do for yourself, you got to match that for your employees, even though their income might be lower and it should be lower than yours. So it's not really the same dollar for dollar contribution, but you do have to put that same formula to their pay as well. So if you do a SEP for you, you do a SEP for them. So those are the major types of retirement plans that you can put your money into where you're going to get a tax break today. Now, there are Roth 401ks. There's Roth IRAs, of course, right? The Roth is where you don't get a tax break today, but you get a tax break tomorrow with your retirement plan. So you don't. So if you put in $1,000 into a Roth IRA or a Roth 401k, you don't save taxes on that $1,000 today. However, you're able to, when you pull that money out of those Roth IRAs, you don't pay taxes on those dollars. Unlike the traditional IRA that you're going to pay taxes on the distribution out of those IRAs and those 401ks and those simple IRAs and those SEP IRAs in the future, right? So what you have to decide if you're going to do a traditional retirement plan and save tax dollars today, or a retirement plan like a Roth where you're going to save tax dollars tomorrow. What are you right now? Like, are you going to have more income today or more income, taxable income in the future? More taxable income today, more taxable income in the future. That's the determinant of should you put money in traditional plans or should you do Roth plans? And sometimes you don't really know if your taxable income is going to be more today or tomorrow or what the tax brackets are going to be. But at the end of the day, what happens is you need this type of balance. Yes, you need traditional retirement plans, IRAs, SEPs, simple I-401ks, but you also need a combination of those Roth, those tax-free investments. Now, speaking of another tax-free investment, I find more times than none, people miss out on the opportunity to save into a health savings account. And sometimes people don't even realize it. A health savings account is the only investment out there that allows you the tax break on the front and the tax break on the back end, which means you can save money into a health savings account and get a tax deduction today. And when you pull money out for medical in the future, no matter when it is in the future, you get to pull that money out tax-free. So it's clearly you're never paying taxes on this money. So for you to qualify for a health savings account, you have to have a high deductible medical plan. A high deductible, if it's just you, your deductible needs to be $1,500 or more. If it's a family plan, your deductible needs to be $3,000 or more. And if you qualify for an HSA, a health savings account, you're able to put away as a single person, just on yourself, $3,850. I'm sorry, my watch just went off. You're able to put away $3,850 every single year into that health savings account. And if you are a family, you can put in $7,750 a year. And here, if you're over 55, then you're able to put in an additional $1,000. Now, the health savings account isn't a use it or lose it. What happens there is that when you put money into this plan, if you use it for medical anytime in the future, the money comes out tax-free. But starting at age 65, if you pull that money out for any non-medical expenses, you're actually you just pay taxes on the gain. So then it acts just like a traditional IRA, but you're not penalized at all for taking money out of there. So it is one of the best retirement accounts out there to get more money in your pocket and to save those tax dollars. Woo! Okay. We went through a lot, and I need to wrap up this podcast. So hopefully that helps you, and it helps you understand the value, why I always say pay yourself first. Put money away. Put money away into a savings account that's either going to help you save taxes today or help you save taxes tomorrow. Because when you do that, when you minimize your taxes, you're able to invest in yourself, your business, and your future. All right? As always, invite other people into this Live Wealthy podcast. I'm here to educate on own it, earn it, grow it, building your wealth and your worth at the same time. Subscribe below, ask me questions, and click on the link because I have something for everyone. I have discounts to course material where you're creating your own financial plan, course material where I'm teaching you all of the details around how to minimize your taxes. Anything and everything is right here because I'm committed to you living wealthy. And now you can access the first of its kind online digital wealth advisory platform called Grow It. Inside of Grow It, you're going to design your own customized wealth style plan where you align your spending to your savings so you can still live for today and plan for tomorrow. I'm going to teach you proper debt management, how to invest your money in alignment with your own personal financial goals, and how to reduce your taxes so you can maximize your wealth. Also, you're going to be able to have a one-on-one private session with a private wealth advisor so you can implement your financial plan and then also have an opportunity to transfer over your investable assets to our recommended investment platform. The time is now for you to start living wealthy.